Well, let's take a look at the currency world. Dollar yen sitting to the upside at 108.18. Euro dollar is losing trade. It is currently down to 145.76 after slipping below the 146 mark. Now, let's bring in Kowalczyk, Chief Investment Strategist at CFC Seymour, Hong Kong. I do want to actually bring in the Korean won first up. Sri just mentioned it in the headlines there, Dariusz, and I've just noticed that the Korean won has actually been turning weaker this morning, despite the fact that we've got the finance minister saying that they really are against one-way bets against the currency. They've got the ability and the will to try and support the currency. Does the reaction in the market suggest that people don't really believe that the government has the ability to turn around the sentiment towards the currency?
I think that's exactly right. It's always the case when a currency comes under pressure that policymakers come out and say that nothing will happen, there is no chance for a crisis, like we heard this morning. And such statements fly in the face of what's happening in the market, which means that speculators smell blood and are trying to see if the statements will really be followed by actions. And I think that the deteriorating external position of South Korea makes it pretty much impossible for the government there to avoid at least a mini crisis. So the won should fall further and at the end of the year at 1200.
In the year at 1200, you know, what's interesting is not just the Korean won that is facing attack from investors. It does seem as if central banks in Thailand, Malaysia and Indonesia are suspected of intervening to defend their falling currencies in trade today. What does this tell you about what's going on around the region? Are we looking at full-blown currency crises?
I think it's too early to say that at this point, because when you look at the region in general, external positions are not that bad, but the problem is that they have deteriorated sharply, and we saw trade data, for example, yesterday out of Korea, Indonesia and India, all of which showed deficits and bigger than expected ones. So definitely there is pressure on local currencies, especially at the time of continued strength in the US dollar, and further interventions will definitely come. But I think that currently the currency that is the most susceptible to a crisis is the Korean won because of the high deficits on the trade and financial accounts, as well as very high foreign debt.
Very quickly on the Japanese yen, slightly weaker today after the sudden resignation of the Prime Minister. Medium term, though, what is going to drive this? Is it still risk appetite versus risk aversion as opposed to what's happening on the political stage?
I think that political events in Japan will not have a major impact on the yen because exactly it's driven more by how the market perceives global risk and whether we are going to have some carry trade going on or not. In my mind, the situation in global financial markets continues to be fragile enough to prevent the yen from any major weakening. And in fact, when you add to that recent data out of Japan, where all indicators are pretty much beating consensus recently, and inflation is also moving higher, central bank is expressing concerns about that. This provides some support for the Japanese currency, and there could be some modest further upside move, especially if we hear further negative news from US investment banks that will report pretty soon.
Absolutely, and in this environment of risk aversion, the Australian dollar has been one of the biggest losers, really falling off a cliff since about the 22nd of July. We've got the RBA meeting today. Dariusz, I'm guessing the 25 basis points is fully priced in. What about the chance for a 50 basis point cut?
I don't think that we will see 50 basis points because data does not warrant that, especially capital investments numbers that we saw last week were fairly good, which will mean that the economy will continue to expand, maybe at a somewhat disappointing pace, but the numbers definitely do not warrant more dramatic response that a 50 basis point cut would be. Now, the market is kind of toying with the idea of such a sharper cut, and that's why the dollar fell below 85 cents today. But I think if we see 25 basis points, maybe there could be even some small rebound in the Aussie after such decision.
So in which case, where would you see Aussie heading towards the end of the year, Dariusz?
Our forecast is 89. We think that commodities will recover in the fourth quarter, which will be supportive for the Aussie, and the situation in the US itself is not strong enough. We believe that the rally in the US dollar is overdone, which will allow the Australian dollar to gain back some of the ground it has lost recently.
US dollar rally overdone. Indeed, we saw it rise to 2008 highs against a basket of currencies. Derek, it's always good to talk to you. Thanks for your time. Derek Kowalczyk, Chief Investment Strategist at CFC Seymour, Hong Kong. Coming up, we'll take a closer